So imagine for a second that you've spent decades building an absolute empire on one single brilliant idea, and now you have to risk it all on something completely different. Well, that's exactly the high stakes game that Sun Pharma, a true titan of the drug industry, is playing right now. They're making a massive pivot away from the very business model that made them a giant in the first place. It's a fascinating story, so let's dive right in.
Okay, before we get going, just a quick but really important heads up. This explainer is for educational and informational purposes only. It is absolutely not investment advice. For any of your own financial decisions, you should always consult with a qualified professional. And that really brings us to the core question here, doesn't it? When your company is the size of an aircraft carrier, how in the world do you make a sharp turn without tipping the whole thing over? For Sun Pharma, this isn't some theoretical case study for a business school class. This is the real-world, critical challenge that's going to define their entire next decade. To really get what's happening, you have to understand the two very different worlds that Sun Pharma is living in right now. On one side, you've got the generics model. This has been their bread and butter for decades. We're talking massive volumes of drugs, absolutely brutal price wars, and razor-thin profit margins. It's a game all about being the most efficient. But on the other side, you've got the innovation model. This is a high-stakes casino of R&D, patent protection, and hopefully massive rewards. It's a game of scientific breakthroughs, and Sun Pharma is trying to become a master of both at the same time.
So you might be asking yourself, how can a company even attempt such a mind-bogglingly huge pivot? Well, it's because they're starting from a position of incredible strength. Let's break down what that foundation actually looks like.
First off, look at this. They are not putting all their eggs in one basket. Their revenue is split pretty evenly between their home turf in India and the US, with a really healthy chunk coming from other emerging markets. This global balance is so crucial. It's a safety net. If one market has a rough quarter, the others can help pick up the slack, which gives them the stability they need to take these big strategic risks.
And speaking of their home market, in India, Sun Pharma isn't just a big fish. They are the undisputed whale in the pond. Now, 8.3% might not sound like a crazy high number to you, but in a market as vast and fragmented as India, that is pure dominance. This number represents decades of building brand power and, most importantly, trust. And that dominance, it goes way deeper than just sales numbers. The company is #1 in prescriptions across 13 different medical specialties. Think about that. When cardiologists, dermatologists, and pediatricians all across India are writing out a prescription, there's a very good chance it's for a Sun Pharma product. That right there is the definition of deep market penetration.
And here it is. This is the jet fuel for their innovation engine. A $3.1 billion war chest of net cash sitting on the balance sheet. Having that kind of capital just ready to go means they can fund incredibly expensive, high-risk research and even snap up smaller, innovative companies without having to go into debt. It's the financial firepower that makes this whole pivot even possible.
But even with a foundation that strong, you can see some serious cracks starting to appear in that old generics model. And these are the pressures that are essentially forcing the company's hand, pushing them to change course. And you don't even have to dig for the problem. Management is pointing right to it. I mean, this is a remarkably candid quote from their North American CEO. He's just stating it bluntly. The U.S. generics business, which was a core pillar of their success for years, is actually shrinking. And it's not just one single issue. It's like a perfect storm. You've got intense competition and pricing pressure from all sides. You have serious regulatory warnings from the FDA at 3 of their key manufacturing plants. There have been some costly R&D setbacks. And on top of all that, expensive legal battles. The old, reliable generics engine is just getting squeezed from every possible angle. So, with that old engine sputtering, what do? Well, Sun Pharma is aggressively building a brand new one. Let's take a look at this pivot to innovation in action. And you can see this shift happening right here in the numbers. It's plain as day. Back in 2018, these innovative specialty drugs were just over 7% of their total sales. Fast forward to today, and that share has nearly tripled. This is not a slow drift, folks. This is a deliberate, rapid sprint toward a new business model. So what are these new growth engines? First up,
There's L-Kesil V, a newly launched drug for alopecia, or hair loss. Then you have UNOLXENT for skin cancer, which is on the horizon. They're also expanding the use of their existing blockbuster drug Ilumya. And then there's the big one. They are positioning themselves to be in the first wave of companies launching GLP-1 drugs in India. That's the massive category of drugs for diabetes and weight loss. Each one of these is a potential major new revenue stream.
And listen to the specific language that the company's chairman, Dilip Shankvi, is using. He frames the launch of LQ-Selvi not just as a new product, but as a growth engine. They aren't just launching drugs anymore. They are consciously building a portfolio of new engines to power the company into the future. All right, so what is management actually telling investors and analysts about the road ahead? Let's look at their official guidance and the challenges that they themselves are pointing out. For the coming year, management is guiding for mid to high single-digit revenue growth. Now, that's a solid number, but it's not exactly explosive, right? And that figure perfectly tells the story we've been talking about. It's the simple math of a declining generics business being canceled out and then slightly overtaken by a rapidly growing innovation business. But, and this is a huge but, that new growth comes at a very steep price. Management is being super transparent about this. They're telling everyone to expect an estimated $100 million in direct costs just this year to get these new drugs off the ground. The key takeaway is the trade-off. They are knowingly taking a hit on short-term profits to fuel what they hope will be much, much bigger long-term growth. So let's pull this all together with a quick SWOT analysis, because this slide is basically the company's entire strategic battlefield in one view. Their strengths, like being the market leader in India and having that huge pile of cash, they provide the foundation for this big bet. The opportunities, driven by that exciting new drug pipeline, are absolutely massive. But the weaknesses and threats are just as real. The U.S. generics business is declining, they've got regulatory hurdles, and there is immense pressure to execute this pivot flawlessly. This is the tightrope they are walking every single day. And so, it all comes down to this one single, multi-billion-dollar question. Sun Pharma has pushed all its chips to the center of the table. They're betting their entire future on innovation. They absolutely have the money and the market power to pull it off. But will this giant ship successfully navigate the turn to a brand new destination? Or are the risks from the old business and the massive cost of the new simply too great to overcome? That is the bet that will define the next chapter for this pharmaceutical giant.